Can something as simple as a moving average crossover strategy actually work in Forex trading? Find out after this. So a moving average crossover strategy is actually a very popular strategy among new traders because it's very simple. Essentially, all you have is you have two moving averages, a fast moving average, in this case our blue line, which is our 50 period, and we have a 200 period or red line, which is going to be our slow moving average. And essentially all a moving average crossover strategy is that when the price, the blue line crosses above the red, that's a bullish signal or a buy signal, and when the blue line crosses below the red, it's a sell signal. Now, at first glance, this looks like a very simple and effective idea. However, sometimes you get markets like this, where the market is very indecisive and there's crossovers back and forth, and you can get chopped up into a million little pieces trying to trade this market. However, when looking at a simple moving average crossover strategy like this, can it actually work in the world of Forex? Now, I think that there is some scenarios where this can actually be an effective trading strategy. However, it may be a little different than you expect. Notice here that we're looking at the daily chart. Now, what we're looking here, we're looking at the Euro USD daily, and I want to go back in time a little bit here and look at some of the scenarios that played out with this very simple concept. Again, we're looking at a 50 period moving average, which is our blue, and a 200 period moving average, which is our red. And we're going to take theoretical buys and sells when those lines cross above or below each other. What you see here in around, 2002 is we had a fantastic run up here that would have net us a massive amount of pips if we were trading this strategy. You can see we would have gotten in right around here, let's say, and if we had traded all the way until, I guess you could say this is a close beneath, right there, that's over, what is that? 2,360 pips, a massive movement there. But the drawback is here, though, that is a massive amount of trading time, of course, over a year of trading there. However, what you can see is that on the longer term, and that's what I want to get into in this video, I think that the longer term potential here for a moving average crossover strategy actually may be of interest. Again, you had a loser here, right? Selling underneath. You probably would have closed the position right around here. That would have been a loss. However, you got a nice movement here. Right? You closed above, you go long here, and you didn't close beneath until right around here. Let's say that's, a couple hundred pips at least. And then another strategy entry here, right? A sell here, buy back here, buy here, and you would have ridden up some of these really fantastic long-term trends. And you would have closed out here, and look at this one. This is crazy. Another nice sell-off. You would have bought here, right? And then you would have sold. Now, the whole point of this, however, is that a lot of times you're not going to make a lot with this kind of strategy. A lot of times the market is going to reverse and you're going to get cut off. But it has the potential for some really, really massive run-ups that you can take advantage of. For example, right here, you can see just a massive move to the downside using this very simple strategy. When the price closed, when the 50 period moved beneath the red period, which is our 200 slow moving average, you can see we had a massive sell-off continued all the way down to this point where we would have been able to close out a massive profit. That's the concept here of a simple moving average, guys, moving average crossover. I think that the interesting part of this is that when applied to a long-term chart, especially like the daily or maybe even the weekly, simple concepts like this can really take advantage of momentum and long-term trend following in the market. Now, not to say that this is going to be a guarantee of profit or anything, but it does seem to have a pretty good track record here of producing some really nice long-term signals that could have yielded some really big profits. I hope this helped, guys. Very simple concept. I think that the traditional moving average crossover may not be your best bet in trading, but something like this could actually be a really good investment opportunity and actually produces some really good signals here on the euro dollar just from looking at it for a few minutes here. Thank you guys for taking the time to watch this video. I do hope you enjoyed. If you did, make sure you give it a thumbs up here and also subscribe to the channel where we make lots of free Forex educational content here for members for free. So thanks again for watching, and we'll catch you on the next one.